Hello and welcome back to Kitco Mining's Digging Deep, sponsored by Revival Gold, with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is John Feneck, founder of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks for having me, Paul.
Now, John, we are going to need a backhoe to get through the amount of news we have to dig through this week. Let's start off with the positive. Orla Mining has agreed to buy the Musselwhite gold mine in Ontario, Canada from Newmont for $810 million in cash, and an additional $40 million contingent on the gold price. Musselwhite will more than double Orla's gold production to over 300,000 ounces per year and boost its near-term growth profile to over 500,000 ounces a year, with production from the South Railroad project in Nevada expected to commence in 2027. This is the second time Orla has bought former Goldcorp assets, as it bought its Camino Rojo mine in Zacatecas in Mexico with an industry-leading $720 per ounce all-in sustaining cost from Goldcorp a few years ago. Musselwhite was a Goldcorp asset. Newmont then got it when it bought Goldcorp in 2019. While Camino Rojo was bought for stock and a royalty, Newmont is getting cash for Musselwhite, and Orla is loading up on debt to do so, and a gold prepay facility and convertible notes. Orla held $145 million in cash on November 17, but it's only paying $10 million of cash for this transaction. John, this seems to be another shrewd transaction from Jason Simpson and co at Orla, with them taking a giant step to becoming a mid-tier gold producer.
Yeah, very bold move. Curious as to why they didn't use more of their cash, and I did look at the terms. I mean, they're not bad terms. It's just why not use the cash? But I think it's important to note in 2011, 2012, we saw a lot of companies, Paul, buy on the way up, right? And then we know what happened after 2012 to the gold price. So I'm not suggesting we're going to be in that scenario. I'm very bullish on the sector. It's just when you see large transactions, it's one thing, but when you see debt, it's another. We avoid debt almost like the plague in every name that we buy, just because it gets people into trouble if they get over their skis.
Well, I agree with you, John. It does seem odd that Orla is taking a new $300 million loan rather than use more. It's more than $100 million cash, whilst at the same time it also says it wants to pay down its debt as soon as it can. Orla did say that it is getting a new lender, so perhaps this loan is more of a strategic maneuver. Mm-hmm. Perhaps it will get some analyst coverage out of there, more eyes on the stock, something of that nature.
Right. Yeah, that's possible.
Okay, now Newmont has also agreed to sell its Éléonore gold mine in Quebec, Canada, to private UK miner Dilmar for $795 million US in cash, which means that Newmont will have delivered up to $3.6 billion in proceeds from divesting non-core assets this year, against its promise of raising $2 billion. John, with most of Newmont's divestment assets now gone, do you expect M&A activity in the broader gold space amongst the juniors, developers for their assets? Do you expect that to pick up now?
I do, and I think it's going to be a tremendous year for M&A in 2025 in our sector, and that's why we're spending most of our time in the mid and small cap and micro cap sectors, because we think there will be a lot of opportunity there. And by the way, I have to say, Newmont has done a phenomenal job of shedding those assets, and for people that are looking for a conservative play, this is the largest holding in GDX, and it's got a nice yield, and trading, 41, 42 this morning. It's unbelievable. When you look at a long-term chart of Newmont going back 25 years, it traded much higher than this in a much more depressed gold price environment. So I think Newmont provides a lot of value here.
Well, Newmont is the sector leader in ounces produced. It's the leader by far, and also in market capitalization. But it's got $3 billion in cash. It's got $8 billion in debt. It's returned more than $1 billion to shareholders this year. What are your thoughts on its balance sheet, John?
Looks good. I mean, don't forget, Paul, and I know you know this, but the free cash flow opportunity for a Newmont or an Agnico is just massive here with gold at this price. And what's interesting about the gold price is that it's been extremely resilient. So if we were in an environment where we hit 2,800, then went back to 2,000, I'd be saying, a different tune here. But I think, we saw gold bounce right off around 25 and then rally all the way back to 2,700 plus before today's sell-off. So, these large cap gold stocks like Newmont and Agnico are able to clip a nice margin here for many quarters going forward, in our view.
Now, another company that may benefit from a pickup in M&A activity is US Gold, which received an air quality permit, which is the final permit it needs to build its CK Gold project in Wyoming in the USA. It is looking at a 20,000 ton per day operation to produce more than 108,000 ounces a year of gold at CK with an optimized PFS due before the end of the year. John, this is another mining project in the US that's been permitted. And with Donald Trump taking office in the new year, will there be a mining revival?
I think everything in the U.S. is going to get more of a bid as his tenure, moves forward. If you don't believe me, take a look at projects in Alaska, Trilogy and Northern Dynasty. I mean, these stocks have exploded since November 5th, and it's because they were, getting, I don't know if it's unfairly tarnished, but clearly tarnished by the Biden administration. So Trump is going to come in and I think just be more, if nothing else, just open-minded to how can I create job growth in the U.S. This is a sector that can do that, right? And so U.S. Gold, congratulations, because, it's not easy to get permitted at all in any jurisdiction these days. But to do it in Wyoming was quite a feat because, this is the first time in decades that a hard rock mine like CK has been permitted in Wyoming. I did talk to management following that press release, and they're very excited about the prospects moving forward.
Excellent. Now, John, we last spoke just before the US presidential election. Since then, Donald Trump obviously won, and he's named some key people that will form part of his administration, picking hedge fund manager Scott Bessent for the Treasury Secretary. He's created the Department of Government Efficiency led by Elon Musk, and modeled perhaps on the dramatic cuts to public spending Argentina's President Javier Milei has achieved. How will DOGE or Doge play out in the US? Can Donald Trump finally drain the swamp?
That's a difficult question to answer. I mean, we haven't even gotten into his presidency yet, but clearly he is being very aggressive with creating. I think he just completed his cabinet, right? So like he's got his war room, and it'll be interesting to see if everyone makes it to the finish line. There's going to be some hurdles, just like there was for Gates, right? So like we have to see how that transpires, but. Look, I think the gold and silver are getting sold off today largely because of the hedge fund guy getting appointed. It's like, why is that a negative for gold and silver? I don't get it. I mean, the markets are so tender right now, and you've got tax law selling on top of it. So it just provides a great buying opportunity, I think, for investors that are smart right now, that are sitting at their computers, able to buy things cheaply. I think you'll be happy with your purchases going forward into 2025.
Okay, quite a bit of lithium news this past week, most of that related to the United States as well. M&A in the lithium space saw Sayona Mining and Piedmont Lithium agree to merge in an all-share deal to unite an operating hard rock operation in Canada and development projects, including lithium hydroxide facilities in the US. John, lithium seems to be increasingly cutthroat following the crash in pricing. So this merger seems to make sense on many levels, not least of all survival.
Lithium equities have been underwater for many months now, but I will point out that the major ETF out there, which houses a lot of these lithium equities, LIT, has actually bottomed and has moved nicely up here in the last couple of months. So I think the bottom may be in for lithium equities. And we haven't bought that ETF yet, but we're tracking it. We have looked at a couple of other lithium opportunities as well, because it's starting to get more interesting at these prices.
Also in the lithium space this week, energy company ExxonMobil signed a non-binding lithium supply deal with battery chemicals company LG Chem regarding its proposed Smackover Formation project in Arkansas for up to 100,000 tons per annum of lithium to be sent to LG's Tennessee cathode facility, which is due to open in 2025. Other energy companies are also looking at diversifying into lithium, including Equinor, Occidental Petroleum, and Chevron. John, it does seem that the big boys in the energy space are starting to position themselves in lithium. How will this impact the lithium market evolution?
Well, if that trend continues, it's nothing but good for lithium equities. Again, the small to mid cap stuff, right? Because the big boys are going to take those companies out eventually. And I think that, like we were just pointing out, things get really bombed out in our sector, as you know, Paul, and it usually takes a couple of years for things to kind of right themselves. If you look at a chart of LIT as a proxy for lithium equities, I mean, it seems to have found some love, just recently, and that's bullish, I think, for the subsector.
Okay, we have a lot more to come, but first a word about our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
Guess who's back? No, it's not M&M, although we are arguably talking about another rehash of past success. Fresh from having sold the Windfall Gold Project in Quebec to Goldfields for 2.2 billion Canadian, the Osisko team is back with Osisko Metals and a 100 million Canadian bought deal financing to create a North American base metals company. Osisko Metals will be led by John Brzezinski as executive chair and Robert Wares as CEO, and it will be focusing on the past producing Gaspé copper mine in Quebec and have zinc exposure at Pine Point in the Northwest Territories. Osisko Metals acquired Gaspé from Glencore in July 2023 for $25 million US in cash, an offtake agreement and a 1% NSR. The project hosts an indicated resource of 824 million tonnes, grading 0.27% copper, 0.015% molybdenum, and 1.75 grams per tonne silver, containing 4.9 billion pounds, of copper, 274 million pounds of molybdenum, and 46 million ounces of silver, making it the largest undeveloped copper asset in Eastern North America. John, they say that teams with serial success attract the best projects, and Osisko Metals seems to be off to a flying start here with Gaspé.
Yeah, I don't know too much about it. I did reach out to Osisko in late September to take a meeting at the Stockholm conference, Nordic Funds and Mines, and they didn't show up. So if they're listening, I'm interested to talk. But I think that there's a lot of opportunity in copper projects going forward, Paul, because when you look at the macro, we're trading around $4.13 a pound right now. I mean, when you look at the big boys like Goldman and Morgan Stanley, they're all calling for much, much higher prices next year, right? Like at least 15 to 25% higher, depending on who you're looking at. And that's on the low end. So I think, buying copper through something like CPER, which is just the tracker for copper price, is something that's looking more attractive to us. I think, anything in the high 3s, low 4s is a good buy long term.
I spoke with Osisko Metals CEO Robert Wares last week, and he said the company's on a fast track, looking to get to a final investment decision within a few short years. It's already got the offtake with Glencore. It's got a lot of infrastructure there. It's got a lot of things already in place. And as I mentioned, it's starting with an 824 million ton resource. So it looks like that's a project that could be in production in a few short years, whereas a lot of greenfield projects take at least 20 years to be able to get into production. So a big positive there. A good week for Osisko. The Osisko franchise elsewhere, as well as Osisko Development, received notice of approval of its BC Mines Act permit applications for its Caribou Gold project, which allowed the company to commence construction after project financing. An optimized feasibility is expected in 2025. John, with the Osisko franchise seemingly challenging the success of the Marvel franchise, it really does bring home the importance of networks and the serial success of teams. In addition to Glencore, it's done $100 billion bought deal financing. It's got Franco-Nevada coming in as a strategic investor. Can franchises be so successful in the mining space?
Well, there's only a handful that really have done that, in my view, over multiple cycles, right? And Osisko, clearly, if you look at the royalty company, OR has done extremely well. I've met with different execs over the years, never had a bad experience. I will say ODV, which you just mentioned, Osisko Development, is pretty beaten up right now because it did 2 large financings this fall. So obviously you're going to see some selling pressure. We own a project right next to that, which is Golden Caribou, GCCFF. We just met with them last month at a conference, and they've been drilling that project. And I know they've talked to Sean, the CEO of ODV, about those drill results. So that area seems to be pretty interesting. In fact, ODV surrounds that company on 3 or 4 sides. So, we definitely look for success, and then we look around that area and see what else is going on. And that's one of the things that's helped us over the years.
Excellent. Well, let's have some more success. Troilus Gold received commitment letters for $1.3 billion for the development of its Troilus Gold Copper project in Quebec, adding a $300 million loan guarantee from the Export Development Canada to similar commitments for $500 million from Germany and $500 million from Finland and Sweden. John, government funding for copper projects seems to be coming available now, perhaps suggesting that governments are realizing, hey, this really is critical.
Yes. There was a piece that got put out by BMO, I think around November 14th, right around that topic, Paul. They basically said that copper was going to be added to different lists if it wasn't already on critical lists going forward. I don't disagree with that. As you know, we've been telling your listeners now for probably 2 years that we think China is developing a stronghold in certain metals. I'm going to read this article title so people can Google search this so I don't get it incorrect. China to tighten export curbs on critical minerals. That came out about a week ago. It moved a lot of stocks that were affected by that news. Really, we spent a lot of time in tungsten, and we own, in full disclosure, 2 stocks that are publicly traded there, Guardian Metal, GMTLF, and Fireweed, FWEDF. We think, like you were just suggesting, that both of those companies are going to get some type of funding at some point because the U.S. is so far behind in critical minerals, whether it's copper or tungsten or whatever. It's like you can go down a list and it's amazing if you spend an hour looking at this on a weekend, how much China has a stronghold on the critical minerals, in the world. And how is that going to play out in a Trump world? I mean, I don't think it plays out well. I think China will stockpile things and be more aggressive, and that news kind of suggests that.
Now, Troilus, which is a 124 million Canadian market capitalized junior, has done a great job of lining up financing for what is a $1.1 billion development at Troilus. And the company says that the copper aspect to it has been fundamental in aligning this financing from Germany, where it's working with Rubis from Finland and Sweden, Boliden, potentially participating there. And if I remember correctly, it was only perhaps at PDAC last year or around that time that Troilus actually started talking about the copper potential of the Troilus deposit. John, what does it tell you about the gold space when gold projects are really having to emphasize and focus on their copper component to really, gain attention, move the needle, that kind of thing, line up financing?
Yeah, as a contrarian, I think it's a good indication that we're near a low in gold equities. I think I have no idea why we're so low on some of these gold stocks. We're like a kid in the candy store right now, selectively buying things during tax law season that are getting beaten up in November and into December. It's going to be the same thing, unfortunately, unless we see some type of news that drives something to the contrary. But we're in a momentum market right now, Paul. Right? I mean, if you look at Bitcoin, if you look at tech, it is just everyone grabbing whatever they can. There's never been anything in U.S. history that, since I've been alive, that has been anything like this kind of market, including 1999.
Okay, big news in the copper space last week was perhaps, or the biggest news was perhaps BHP unveiling its plans to boost copper production in Chile at a cost of some 10 to 14 billion US dollars at a capital intensity of $23,000 per ton to counteract grade declines and aging assets and stabilize its production there at about 1.4 million tons per year. Some $7 to $9 billion of that will be in new projects at its massive Escondida mine to offset declining ore grades, which includes a new 220 to 260,000 ton per year concentrator to replace the 130 to 145,000 tons per year Los Colorados concentrator that is already there. Wow, can we have a large fries and a big gulp with that? 220 to 260,000 tons per year concentrator. This is going to be louder than drum and bass. John, this to me says that ESG seems to be fading into the background as companies are prioritizing satiating the need and demand for metals like copper rather than perhaps other ESG concerns.
Interesting point, and we don't follow the large caps too closely, so I don't know the details of all of what you just said there. But I will just say that there's got to be a balance, right, between ESG and like getting stuff out of the ground. I mean, it's unbelievable to me how long things take to permit still. I'm really hopeful as a U.S. citizen that Trump helps with that. There's no reason that we should be this far behind our competitors, I guess, to say it nicely, like China. I mean, it's just, I think we're going to get to a better place globally, but it's going to take more time than the average investor would like.
Now, the international battle over resources took another twist last week with Resolute Mining agreeing to pay 160 million US dollars to Mali after the West African country's military government detained its CEO at the end of a meeting over tax and other state claims. The company paid an initial $80 million out of its $157 million cash reserves to settle the claims, which it earlier said were unfounded. Mali owns 20% of Resolute's Sayama mine in Mali. The government rewrote its mining code last year to increase state and local ownership of mining assets to obtain a greater share of the income that they generate. John, to what extent or not has Resolute paid a ransom or been extorted as Mali pressed its case to increase its government take?
I can't really say, Paul. I mean, from what you're just telling us there, if a company says, hey, this is baseless and then pays millions and millions of dollars, that's scary, right? You have to look at that as an investor and say, that jurisdiction has more risk than I thought. And Mali was sort of in the news in January of 2024 with B2 Gold, which is one of our holdings in full disclosure. So, BTG had been operating there for years with Fecola, as you know, and then they got a surprise from the government. And we don't like surprises. No investor likes surprises. So that's why BTG is still depressed in share price in our view. And it presents a pretty good value because they have a great yield. So we look for things like that in Newmont that are just completely thrown out the window with reasonable prospects going forward. It's like that's the kind of stuff we would buy in the big caps space, as long as we can feel comfortable with that particular mine, Fecola, not being like a huge percentage of their future cash flow, right? So that's another jurisdiction that we have on watch, to make sure that all the investments we have in that region are going to be okay.
To what extent or not do you think this could set a precedent for other countries seeking to increase the government take? I mean, this was quite dramatic. Other countries have pressed for increased ownership of assets, and companies like Barrick Gold, for example, have been quite open to sort of sharing the wealth and sharing participation in projects in various countries. Does this raise the bar higher or increase the likelihood that countries, that governments will seek direct participation and or increasing taxes from mining assets?
It's possible, using that as a precedent, but also the fact that the gold price continues to crank, Paul, right? When you have an asset that's continuing to do well, people want their fair share. And that's, as long as it's reasonable, who cares? But it's never that reasonable. So it's not going to be wonderful for certain mining companies that are in jurisdictions where there are historical problems like this, right? And so Mali right now is one of those areas. Like, again, we'll take risk with the BTG because the stock is depressed and it's got a yield, but not going to be something that we're like looking for, junior exposure in, because you just don't know, like when you have such a small cash balance and something happens like this, you could just go bankrupt very easily, in our opinion.
I mean, circling back to our earlier conversation about M&A in the gold space, John, with moves like this perhaps dampening investor appetite to invest in companies and projects in Africa, this could perhaps also stimulate more of a scramble for M&A activity to pick up assets in jurisdictions that are perceived as safe, such as Canada, such as the United States. What are your thoughts about that?
Absolutely. We're very overweight US and Canada, and we've been saying that for months now. It's not a secret. We continue to find value in those areas, and we can sleep at night, right? Like, we don't want to wake up to news like this where we're just, our thesis is correct about the mine, it's correct about management, it's correct about the share structure, and then this happens, right? Like, it's very frustrating for investors. And so we are playing in that pool very heavily right now, the US and Canada.
Another international aspect came out last week with Solaris Resources announcing basically terminating its plan or continuing with its plans to exit Canada. The company firmly with its eyes set on obtaining Chinese investment, something which the Canadian government has blocked. The copper gold explorer from Ecuador is closing its Canadian offices and will open an office in Zug in Switzerland. Solaris walks away from a 130 million Canadian dollar strategic investment by China Zijin Mining earlier this year, as the company did not obtain approval for that investment under the Investment Canada Act review. Solaris also appointed former Glencore copperhead Matthew Rollinson as CEO last week. Investors loved the news, with Solaris up 25% on the day. John, looking back at this series of events between Solaris and Canada in relation to Chinese investment, what does it tell you about mining and geopolitics, particularly in the copper space?
It's an interesting question. I didn't follow that news very closely, Paul. I will say that anytime you can land a Glencore exec, obviously that's probably where the bump in share price came from. And as a CEO, so congratulations to Solaris. I think, again, it's like you pointed out, Paul, to go from 0 to 100 in copper, it's going to take you 20 years. So you have to be really cautious about the kind of companies you're investing in, or just buy a basket that you can hold longer term. And that's one of the reasons we like things like US Gold, USAU, that has the permits in hand right now, right? Like they have a path to get there in 24 months in the US, right? So now all of that risk is behind you in terms of, are they going to get their permits? Are they going to have some, person that just rears their head and says, hey, I have an objection here? I mean, that's all behind them now. So it's like, that's what re-rates stocks, in our opinion, is when you can get to a better place in your permitting process. And we own a lot of things that are probably going to get their permits within a year or so for that very reason.
Now, John, this tells me that capitalism will find a way to circumvent artificial barriers erected by governments. Solaris isn't the first Canadian listed company to re-domicile out of Canada, and I imagine it won't be the last, given that China is such a big investor in the metal space. I suppose it also suggests that there is going to be an investment by Zijin or another Chinese company in the not too distant future for Solaris. Is Canada playing its cards incorrectly by making demands on companies that are domiciled there or listed there? Is Canada really missing the big picture?
It's difficult. I mean, the companies that are in Canada want to do deals, obviously, and if they think they've vetted the buyer, then it's frustrating to that company because the government gets involved, right? I don't think you're going to see that same dynamic in the US. I don't think like Trump would allow a large Chinese company to be buying something in the mining space in a big way, right? Like, I mean, yes, maybe some of these smaller micro caps or whatever, but like that's not going to happen in the US. I'm pretty confident in a Trump world that won't happen.
Okay, let's go back to gold. Single asset gold producer Torex Gold Resources received approval to undertake a normal course issuer bid to buy back $7.1 million of its own stock, which is 10% of its public float, which is worth about $203 million at current prices. Torex does not currently pay a dividend. John, why would a single asset producer in Guerrero, Mexico no less, buy back stock rather than acquiring a second asset and removing the vulnerability that single asset producers always have?
Good question. I don't know anyone at Torex. I'm not a fan of certain parts of Mexico where you have rampant crime. Guerrero has a sordid history. It's not like 100% bad. It's not 100% great. So, I mean, it's one of those things where I agree with you, Paul. You want to see companies have 2 or 3 projects where they can pivot. We own very, very few single asset projects. We own Silvercrest. I think you and I talked about that on a previous program. I think you own some as well. That's getting absorbed now by CDE Core. So, look, you go from a single project to, whatever, they have 7 or 8 different projects you can pivot to. That's very attractive.
I think it really is a counterpoint to Orla Resources, who we spoke about earlier in this podcast, which was a single asset Mexican producer. And before they have done any shareholder returns, they bought a development asset in Nevada and now a second producing mine in Canada. Finally, John, let's have a never have I ever section. This past week, I received an invite to a junior exploration company's marketing event, a breakfast meeting. Nothing unusual in that, except the company wants participants to pay $20 for their own breakfast. While I appreciate that a junior explorer is looking to minimize costs, never have I ever had to pay to have a company market at me. John, what is the strangest marketing story that you've experienced?
It's actually just recently. I have, a number of contacts in the mining space, Paul, that I compete with or I'm friends with. And one of them went to a podcast host and said, I have this company that would like to get some exposure and do an interview with you. How much would that cost? And the reply with a straight face was $35,000 US. And in doing some due diligence on this company, this particular host doesn't even have a background in mining or in finance, right? So you have to ask yourself, why would you ever pay that? And it's really frustrating to me to see companies do this because they get pressured by some people sometimes to do things that they don't want to do to get exposure, right? Because people promise the moon and then they don't deliver. I'm not suggesting that they wouldn't deliver. I'm suggesting that $35,000 to do anything on the marketing side, you have to question. Paul, you and I are in the conference business on the side, right? Like we host conferences. I host 2 in the US, you host 1 overseas. And when we're in those kind of roles, I know you and I feel the same way, that we're trying to help not only the clients that are attending, but the customer, but our sponsors, which are companies, right? I mean, let's be fair. They're paying money to be there. They want to meet good clients. And, just speaking for myself, from my Florida conference I just did October 20th at the Four Seasons in Fort Lauderdale, I've made 1 or 2 calls to every single CEO that's attended that, myself, not my staff, saying, hey, what was your experience? Give me some feedback. What can I do differently next year? Can I help you with the people that you met at the conference, right? We're trying to help these companies get in front of good investors through a venue like that.
There does seem to be a lack of questioning about what the value of doing some of these things is and what the potential return is. And of course, it's very difficult for companies to show what the potential return is or what the response from their audience will be, which is perhaps a gray area that many people take advantage of.
I agree. Again, there's a lot of podcast hosts out there. I mean, I'm not saying it wouldn't be helpful to a company to do something for a few $1,000s, like $2,000 to $4,000. It seems to be the going rate for an interview on a good channel, right? So you can get some exposure to your story. But I find a lot of these hosts have agendas. They've got curveballs they want to throw the CEO. It's like, hey, you have to vet these people before you spend the money to make sure that you're getting what you want out of your experience.
Excellent. A very good point there, John. Unfortunately, that's all we have time for this week. So thank you very much, John Feneck, for joining us again.
Of course, Paul. Thank you.
And for our viewers, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.